Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hello everyone, welcome to the Small Cap Discoveries conference call. Today on our call we have Troy Griffiths, the CEO of Vigil Health Solutions. Vigil trades on the TSX Venture under the symbol VGL and on the OTC under VIGLF. The company is currently trading at 51 cents with roughly 18 million shares outstanding, or about a $9 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. Great to have Troy here with us. We last spoke about 9 months ago, sort of smack in the middle of the COVID pandemic. Hopefully we're coming out of it now, and I thought it was a good time to catch up with you. You guys have just released your year-end statements a little while ago. Some decent numbers, good things to talk about. So we thought we'd have you back. So certainly thanks for joining us, and I understand you're going to give us a bit of a presentation to get everybody a little more familiar with Vigil.
Yeah, get everyone up to speed, a little bit of an update, a little overview for everyone. So thanks for that, Paul. Thanks for having me. Let's get the slides going here. Classic disclaimer, and then a little bit about the company first. I'll just start there. Again, if anyone sort of saw the presentation 9 months ago, not a lot of the sort of our core reason for being has changed, but we really are a company dedicated to senior living. We sell emergency call and resident monitoring solutions for the senior care space. We're a leader in our industry, well known, and we're in over 700 North American projects with over 50,000 Vigil-enabled beds. So got a decent footprint, and really one of the big tenets we have is not only great technology, but great people behind it. So we do put a big emphasis on our customer service, and that's helped us get repeat business, especially with some key corporate customers that keep coming back, and that's been very helpful over the many years. So a little bit of just about the senior living space and where we sort of sell into or fit. Basically, our target is sort of a little bit on the higher cost, the higher level of care. So we do things like assisted living, independent living, skilled nursing, and then a combination of those, which is called continuing care retirement communities, or CCRCs. So that's our sweet spot within our niche. They tend to invest to provide the best possible care. They have a need for our product, at least the base of our product, and see the value in adding some of our higher quality products that maybe give them a competitive advantage over others in the space. This is the classic demographic slide. You can see that there's lots and lots of seniors. We keep making us, and we keep making us older. So there is demand pent up. I've got another slide later that talks a little bit about the fact that there's still some lumpiness to our business. That tends to go more along the classic construction cycles of sort of overbuild, underbuild, overbuild, kind of typically. We'll talk about that and how it relates to COVID. So this is just an installation map where we are installed. You can see we're heavily weighted in the US. Over 90% of our sales are down in the US. Where there's people in the US, there's Vigil. And we've been really focused on both the seaboards. We've had a lot of traction lately in the Southeast through some of our corporates, and then the Midwest has been strong as well. So in all the areas you'd expect to have senior living communities and population, that's where we are. So our solution, and I'm not going to get into the real nitty-gritty detail. I went a little bit deeper last time, but I'll just say we have an on-premise enterprise solution that can provide everything from wireless call systems to hardwired call systems, or a hybrid of both. We have our specialized monitoring system for people with Alzheimer's who don't get pushing buttons with getting help. We do wander prevention, fall monitoring. We can monitor the exterior of the building, and all sorts of other stuff we can add, sort of a la carte for our customers. And so they may just have one level of care and they just need one solution, but they change over time. Well, we can change and grow with them, and we can expand, especially for those bigger campuses that have multiple levels of care. So this is our on-premise solution. It's a life safety system, so it needs to be there and sort of keep all the residents safe. But in the last couple of years, we've also bundled in a cloud portion. So this is our Vigil View, and it allows us to add a lot of the bells and whistles that get people excited. Everything from integration to the Amazon Echo and the Google Home, to APIs for integration to third-party products like EMR systems, to built-in dashboarding so that our customers, especially our corporate customers, can benchmark performance for their various senior living communities. They can get emails sent out to them with response times. So again, give them a lot of flexibility and power. And then one of our big sellers these days is our Vigil mobile app, which is an Android or iOS solution that allows the care staff to basically have their calls on a smart device that they might be doing charting or other sorts of things. And then as well, we can tie into a GPS tracking system. So this is where we're seeing a lot of opportunity to integrate to, again, the cool things, while the meat and potatoes is really in that on-premise solution that keeps the residents safe. And this is just a classic screen showing all our customers. Probably means very little to most people watching today, but some of these are the biggest and brightest in our space, and we really do consider them partners. We've been selected in many cases as the principal provider of our product line, and we're integrated into them pretty deep so that we help them do the design and specification stage all the way through to final completion. And it is really a partnership. So that's helped us, again, weather the COVID storm, probably better than I think a lot of people would have expected, and is, I think, positioned us well for the future. And we're always looking for not only making sure we do a great job with these corporates, but ways to add more. So you mentioned it, Paul, a little bit about COVID-19. Obviously, it disproportionately affected our customers' customers. Seniors were the worst hit. For those who somehow were not under a rock and saw the news, especially at the beginning, there was unfortunately just a terrible tragedy in the amount of death that occurred. Senior living was the first places that it actually hit. You know, especially, well, I would say actually Canada had some challenges, but the US just had the most cases in the world. There are 34 million still and counting. So, you know, that delayed our projects, that impacted the industry. You know, that said, I think the one benefit we had was serving seniors is an essential service. So even during the full lockdown, we were still having to ship product out. We're getting orders, shipping product out, and trying to navigate, because the other essential service was construction. Typically construction that was underway. So a lot of our projects, while they went slower, they carried on. And so we were able to, for the first couple quarters, you know, continue to grow the business, continue to fill our orders, those kind of things. And then as in the US, they really sort of were the first ones to embrace the vaccines or actually have access to them. And they opened up sooner. And I've sort of said they were open for business a lot quicker than anyone else. And we saw a lot of new opportunities, new construction happening in stages where we were maybe in lockdown up in Canada. The Southeast especially was open. So we were, and I've got a team of US employees, and they were able to serve those customers and ensure we're implementing, and we were able to manufacture and get product out. So I feel very grateful for that. It allowed us to really sort of deliver at a time when a lot of other people were having to basically keep the doors pretty closed. And I guess a final comment is, you know, our technology actually helps people stay safe in senior living, especially when they're trying to have less interactions or trying to keep those distances. Our solution would allow them to deliver care where and when it was needed. And some of the stuff we're working on is trying to even enhance that more, so we can do things like contact tracing and better controls around, you know, making sure that residents are kept safe. So another side of this is that there seems to be a real push for an investment into technology. 87% of a survey said that they're going to be increasing their technology budget now. So I think they realize that they need to invest in making sure they've got the technology to support things where you're a little less hands-on and you need to be more efficient. And so that, I think, bodes well for us into the future. And then, so where are we today? So again, we were sort of last talked right in the heart of it. I think it was September when we spoke, Paul. And now we're sort of in the first 3 months of calendar 2021. And the challenge has been, we've had over a year where senior living hasn't really had new move-ins. So they've, you know, except for extreme cases, most of them, they've been just trying to keep the resident they have safe. And so their occupancy has been dropping, and it's hit record lows. So our customers have never had as low. They're in the 70s on average, 70% depending on the territory. You know, that said, what we're seeing now is a pretty significant turnaround on that, that there's move-ins are increasing. There's much more feeling of positive impacts coming in the future. And I think the one thing is, and Forbes reported, is basically in nursing homes, 96% of the cases dropped between late December and early March, and deaths fell over 90%. So all of a sudden, to be frank, nursing homes and the like went from one of the most dangerous places to be to becoming one of the safest. They had access to the vaccines early. They have PPE. They've got the right protocols. So in a lot of cases, we're seeing people look to it as a place, whether it's that, and even independent living. People feel like this is a time maybe to move in. They've got, again, access to all the medical services that they might not otherwise have access to in assisted living on a CCRC, those kind of things. So we're continuing to complete projects, have been all the way through. We're delivering them on budget and on schedule, so we haven't been a bottleneck or the problem. What I can say, I just touch on it a bit, total transparency, is there is a supply chain issue out there in the world. We are not immune to it. We have been able to, our team has done a phenomenal job of procuring parts from multiple sources. We bolstered our inventory a little bit, not a ton, but a little bit, to try to make sure we can bridge some gaps. But no question, that part of it, the microprocessor shortages, those kind of things are impacting us. And then the industry, the new construction part of our space, I mean, they're feeling higher lumber prices and other materials. So a little bit of a headwind there, but I think it's, well, it's not going to be fixed in the next few weeks or months. I think it's still fairly short term. I think we're going to see, we're already seeing indications that people are sort of stepping up manufacturing, at least on the parts we're dealing with, and to meet the coming demand. And I mean, the good news is there's demand out there. We're getting fairly notable demand. And then longer term, and I mean, I talked about this before, but there's going to need to be a lot more senior living communities built. And in fact, there was a delay even before COVID, just due to those construction cycles. So we're sort of undersupplied, mostly talk about the US, but it's true in Canada as well, undersupplied for senior living beds. They've got a lot to build over the next, basically got to double the number of beds by 2040. Alzheimer's is continuing to rise, and other forms of dementia as well. So there's going to be significant increased need for care there. And just overall, 70% of people over 65 are going to need some form of long-term care in their lifetime. So it impacts all of us. We're going to need this care. And then when we look at our bookings, so this is our bookings revenue spread over a long period of time. Just here, my goal is to sort of show, again, the bumpiness of things. And this is really largely around construction cycles, because a lot of our new business, our big projects, are around new construction. And so leading into the pandemic, we had a situation where there was some sense of overbuilding. And so there was a pullback. And then we hit the pandemic. So there have been not a significant number of new builds to the degree that we were expecting. And so I feel now that we're at the beginning of yet another uphill, or not uphill, but positive move upwards in terms of new projects going on. And so even saw at the end of the year, we saw an improvement in our bookings. Our backlogs refilled pretty well. So things are looking very favorable now as we sort of head into this fiscal. And on top of that, we also have a recurring revenue component, and it's at about $2.5 million annualized run rate. So you know, it can be lumpy at times, but by and large, it's continuing to grow, and it fills in nicely around our project revenue. And it's a combination of parts, so whether it's wireless devices or bed pads or other sensors, as well as software maintenance, and then as well, we've now added a bunch of recurring revenue around our cloud solutions, including Vigil Mobile. And then one of the things I think, Paul, we talked about, or Trevor suggested we chat about, maybe some of the things we're working on, and I thought I'd highlight some of the bigger things we were working on this year in terms of our product development. We deployed the newest version of our app. Again, it was really favorably received when we came out with version 2. Lots of things we wanted to enhance. We're trying to get it into more hands. We're seeing more people demanding it, so we came out with the version 3. Just better usability, improve the plumbing. It's just overall a better app, and so we're seeing, again, more and more people want to take that up. We were able to certify our Vitality Care System, which is sort of the core hybrid wired or wireless solution, to 2 standards for our space, the UL 1069 and 2560 standards. So that opens up a whole bunch of areas where regulations are starting to come in. So this allows us to, maybe it's Tennessee where they've got the 2560 requirement in assisted living. We've got the capability now to better serve that market. So we really can serve pretty much every market, every regulation in the US and Canada now. And we're continuing to work. So the bulk of our heavy lifting in terms of our development team has been around a real-time locating system. It's going to be an additional feature or product suite that we're going to add to our existing solution, but it's also one that can be sold independently. And so this is that one that's going to allow us to do things like contact tracing, actively locate residents at any time. So it's going to be, I think, a revenue addition right out of the gate as soon as we get running with this. So that's a project. It's a big project. It's a lot of work for our team. So there's still a lot of work to be done. We have received some government funding for that, so that's been helpful. So we can really, again, we've got all boots on the ground really working on that as our priority. And then I'm getting near the end, Paul, then we can just chat. The developments for this fiscal, so we booked $5.5 million. We have a backlog of about 3.3. Our revenue was over 6 million. So we earned before tax 700,000, but our adjusted EBITDA was over $1 million. So, and we had solid gross margins of 52%. And for a small company like us, we got a reasonable cash treasury there of 3.7 million. So I'm in good shape, looking to use that cash for something strategic, but that's still sort of a work in process. And then I guess sort of my closing, and then again, Paul, figure we'll have some questions, but it's really around, what should people who are considering us think about? Really, we're serving the senior housing market. We're dedicated to that, and our broad product suite really means that we're a good fit for them. So that means we're a long-term partner with our customers. Our technology's reliable, solid, and we've got lots of future offerings that we're coming out with. Really focused on recurring revenue for the past several years now, and that's starting to pay dividends and smooth those lumpiness that I was showing. And we've got a great team. So both our, I can't speak highly enough now, especially getting through the pandemic our US guys were on the road during the pandemic lockdown, having to deliver our solutions, implement them. We had some of our salespeople who are based in the US have to do trainings because we couldn't get across the border. So, grateful for all that. And then our in-office team, who again, while everyone else was locked down at home, they're in our office, still manufacturing, still packaging, still shipping. So, again, grateful for all the hard work that our group did. And that's it, Paul.
Troy, you've done a tremendous job. I don't think there's a single question here.
See, it's not fair because I asked Trevor ahead of time what you're going to ask me, and then I'm
going to have to throw you a couple of small curveballs here. Probably, this business to me seems to have such a long runway, and the demographics are really working to your advantage here. How do you sort of, with new products and services, the established base you have right now, do you just go and sell into new sort of greenfield opportunities, or do you have an opportunity to go back to either some of your old customers or even some non-customers with some of the new products you guys are launching?
100%. And I would say we actually spend a lot of time, it's probably 60% of our time working with our existing customers and corporates to not only to sell them their new projects, so corporates will build a new one, but also to retrofit them with some of our newer products. For instance, some of our big corporates have our older wireless system, and so we've been transitioning them to our newer Vitality wireless system. So that creates revenue generating. I'm pretty confident that when we get our RTLS system done, that our existing installs will be very interested in that. I verbally had that from some of our key corporates. So definitely we go back to them. And then we're also running sort of smaller dollar amount campaigns when we come up with Vigil Mobile. We've been sort of really trying to get people thinking, getting their heads around that, moving away from sort of older technology into the app world.
Do you, you obviously got great visibility on where the business and the industry is going. What, let's take steps even further ahead. Where is technology going? What sort of needs are there that you can envision, say 5-10 years down the road, that gives us a good roadmap in terms of where your business could be going?
Yeah, it's tricky because the needs, sort of what our customers' pain points are and have been for a while is really around staffing. And so where we can create staffing efficiencies, they're finding it hard to retain, turnover is really high. And this has been a systemic problem for a while. And so we're going to have to, and it's not going to get better. So we're really working at ways we can make the few staff that are there more efficient, ease their burden. And so that's really a focus where we can do that. And then ultimately, there's talk about the home. And so people want to stay in the home longer, and understandable. I think we all would like that. So while we've looked at that side of the business and we've got the technology to support that, there's the other side of it is the level of care required is getting higher. The people move in later. So what we're building is the ability to take the technology they buy to start with and be able to layer in more sophisticated, higher monitoring stuff with not much pain. So they can add bed monitoring if they're independent living, but they want to keep that person in, but they've had a fall, or some monitoring systems that allow them, if their memory is starting to go, how can we keep them safe but not have them have to move out? So that's really the focus, is how can we make staff more efficient and how can we allow them to age in place for longer?
Yeah, I've seen enough sort of statistics and reports. I mean, people are certainly living longer, but it's introducing a lot more, dementia type illnesses that you're obviously going to have to deal with in these environments. So I can see that you guys are certainly leaning towards that direction with more of that type of technology as well.
Yeah, absolutely.
Yeah. Let's talk a little bit about the business. You didn't really mention much in the presentation about the sort of the share structure is one of the most pristine I've seen in the microcap market. I think you've got 17.5 million shares outstanding. You guys do have an NCIB in place, a share buyback. Is that correct?
That is correct. Yeah.
And it's been active.
It's been active. Yeah. And we're it's not yet, but we'll have to renew it come August. So it's one of those ones. We believe in the company, and we do have a fairly large treasury, so we're just put ourselves back out there because we think it's
And I should disclose, I am a shareholder of the company. So for everybody who's listening, I'm a big fan of Vigil and what they're doing. But there's some other very smart investors that are involved as well. Maybe talk to some of the insiders and possibly some of the other investors that you can
certainly. Yeah, we're fairly closely held. So for those looking, our largest shareholder is also my chairman, is Mr. Greg Pete. Greg's been, for anyone who doesn't know, Greg's been sort of an active technology leader in BC and beyond for years and years now. And Greg's been a great mentor to me. And so Greg's active in terms of what sort of given me great insight and feedback. He leads the board really well, and he's sort of aware of what we're doing. So he's continued to be a big supporter and fan of the company. So he owns shares that we've got as well. Our other board members own shares, and then Pender Fund has a position as well, and that's all disclosed in our insider. And then actually and management has a reasonable position. So if you sort of factor in some of our biggest shareholders, we're probably at around 75+%, sort of what I'll call closely held. So the downside is there's not a lot of movement. We're all holding for the big win, but the good news is we all believe in the company, and we're continuing to hold and acquire stock here and there too. So both the company is and the individuals, when we're not in our self-imposed blackouts, we put ourselves in blackouts on a regular basis. You talked about how pristine we are. We try to be very, very clean, and we try to make sure we're doing everything as sort of top shelf as possible.
Yeah, definitely. That's where I'm seeing it. So you mentioned the big win. What does the big win look like? What do you is there an exit strategy? Is there any thoughts on that? What happens then?
We absolutely sort of always are evaluating, where does the company go? What does it look like in 2 years to 5 years to 10 years? And, ultimately I would expect there will be an exit. It could be very soon, or it could be a few years out. The board's very patient. They believe in what we're doing. They like the business. We just had a conversation about this, but for the write-off, whatever works best for shareholders. And that's where, again, sort of professional view on this. If it's a good deal for shareholders, ultimately, I'd also like to make sure I take care of the employees and the stakeholders, but ultimately take care of the shareholders. And I think we're building a good business. My goal is to build the core business. And from what I've seen, if you do that, other stuff takes care of itself. So, I want to grow. I want us to grow. I think we can get to a much more meaningful size, given the opportunity. But yeah, there seems to be a lot of money out in the market right now. That's all I can say.
Good point. Yeah. What's the landscape look like? Are there other, your competition, how big are they, how do you see them?
Yeah, it is a competitive space. It's a bit of a red ocean in that way, not with all of the products, but with a more basic call system, wireless call systems. Mm-hmm. You might, at the top, I would say there might be 30 competitors. That would be sort of the full ecosystem, with some that wouldn't be able to play in certain spaces we don't. We probably only compete regularly with between 5 and 10 max. The two biggest ones are public companies, are Philips and Stanley. You would, the senior living part of it probably doesn't make a rounding error in there between all the light bulbs and drills they sell. But it's an important part of their business. They keep looking at it and wanting to invest in it. And then there's some regional players, and there's a little bit of action happening. There's a private equity that started a little bit of a roll up. So we're watching the space, but we think we're well positioned actually to compete with them. We got a really, I think, one of the strongest product suites out there. And we've also been really good with our customer service. And I keep hearing that, like my sales team who go out there, meet with people, meet with our existing customers as well as new, we get rave reviews about the quality of our service. And I think that's harder for the big guys to duplicate. So.
So you did mention you got for your company your size, a decent amount of cash on the balance sheet. You are buying back a little bit of stock, but where, apart from, being opportunistic and seeing something out there to acquire, where else do you spend money? How much do you spend on sort of R&D or just, growing the business?
We're trying to be conscious of earnings. So we're not just throwing a ton into R&D, and we're also looking for ways to have others help pay for R&D through different programs. So, we're at a reasonable sort of metric between 8 and 10% is our goal for R&D and investment. So I want to grow that top line. So the reason I'd look at some accretive acquisitions down the road would be to be able to, make a bigger boost jump. So I don't see us needing to make a significantly bigger investment in R&D. Our sales program's working pretty good. I wouldn't want to try to just juice it up with adding more bodies there. We're trying to, again, be strategic. We've got, so I think the real focus right now is where can we be accretive, and that may or may not happen right away, but I'm actively looking at what's out in the space and what's complementary technologies and those kind of things.
So assuming, business stays stable, no curveballs, cash likely starts to increase as you continue to sort of. Yeah,
and it's been consistently, for those that are tracking it, been consistently increasing for the last several quarters. So, yeah.
Gotcha. But I mean, you did a really good job on the presentation, so I'm really out of questions that can't really cover. But is there any sort of parting message or key takeaway you want investors to leave with today?
Yeah, I mean, I'd encourage them to look not only at us, but the space if they're interested. The one thing we're watching, and the board as well as senior management is looking at those occupancy numbers I talked about. So are things going to improve for our customers? And they seem to be. So that would give me a reason to feel more comfortable in the space. And then for us, watch our bookings and our backlog. So those are the leading indicators of what we're selling, and then how much sort of work we have in the pipeline, if you will. And right now we're in pretty good shape for this year. I mean, I'm really working. You can see that again from the publicly released documents where we've got a decent backlog. Combine that with our sort of $2.5+ million run rate on our recurring. So what we're doing right now is really trying to fill for next year. So it's kind of a nice problem to have. We're filling out almost a year ahead of time. We're finding more retrofits, which mean they're going to be pulled in. So, but yeah, it's I think we're in a good place, but we need to watch those things and just see how we do a year from now.
Mm-hmm. Well, listen, congratulations on, certainly sort of managing around a pretty devastating year in your space, and, being able to grow through it. And looks like there's still some exciting stuff to look forward to here in the short term. Long term continues to look great. Troy, it's always good to catch up with you. I appreciate the time, and certainly thankful that you can give us a good solid update today.
Yeah, great. Well, I appreciate your time, Paul, and everyone else who joined the call. And enjoy the rest of your day, everyone. I know we're heading into Canada today, so hopefully everyone gets a nice, relaxing, hot but not too hot day off.
Exactly. Well, happy Canada Day to you. Thank you so much, Troy.
Thanks. Take care, guys.
Bye-bye.